Trading at Trendlines. Yeah, it's something you may have thought about doing, but not known the techniques to proceed. And here's an example of me doing just that. So there's this upper olive green trend line that you can see, and I sold at 5804.5 in the ES futures because of the price being there and other evidence on the chart. I don't believe in trading any one setup alone. It's always best to combine. So on HEMA Ready, I use price action, market timing, and momentum. And in this case, I was looking at price action. Now you can see I had a additional trend line that I drew on a shorter time frame, the 15-second chart, to help me manage the trade. Up until this point, I had started with 2 contracts. I had already exited one and trailed the stop down on the other to max 2 points risk. So by exiting the first contract at 2 points profit and trailing the stop to max 2 points risk, I'm in a neutral situation. And now with the trailing stop moving to essentially break even, 1 tick below my entry, now the trade can only be a winner no matter what happens if there's a quick jump back. So when going short and taking this action primarily off a trend line, I had an expectation of how far down the market might go. But as you can see, it was picking up pace in its downward momentum. So I wasn't looking to get out at a particular preset price. I was looking to only exit when the market would stop telling me it's going down. And to help do that, I use alert lines on the 15-second time frame. This order was put on at 9:27 a.m. and now the market had opened. So I finished putting on my alert so that I could follow and be aware of if this downward move started to slow down. Meanwhile, I moved out my fixed target. I used a trailing stop to get out 99% of the time, but I still keep an order on out further so that if I want to get out at a predetermined level, I have that option. All right, market's still falling. So now I trailed my stop for the first time based on the price action in the 15-second chart. Notice here that there's a black trend line that sort of ends at 5798 on the right of this 3-minute chart, and the market didn't stop at that support. That's why it's important to understand that trend lines aren't just something you just take a trade at just because it's there. You have to look at the other factors around them, and I have a system that approaches that. Okay, so now I had moved the trailing stop down one more time, and this brought us to the final resting place for this trailing stop because, as you can see here, the market started to recover. However, it wasn't breaking above the way I trail stops. So this was just a wait and see now. I do glance back to the 60-minute time frame every few minutes to make sure I'm reminded of the bigger picture trend. But again, my decision to take action was on the 3-minute chart, and my management of the trade is on the 15-second chart, which is, by design, 12 times faster than a 3-minute chart. Now I'm going in and adding another alert because if the market slowed down in its fall, then I want to know if it starts going higher, which would take me out of the trade and book my profit, or if it's going to go down deeper into the 15-second nearby support. So I have my analysis on the 15-second chart still with the same 2-bar high. Here you can see the market broke above it. However, it only went 1 tick above, and my stop is a 2-tick margin. So I wasn't stopped out of the trade yet. In theory, if the futures turn lower from here, I would be able to ride that next wave down. These black lines I'm moving around again are not orders. They're just alerts. So the trade is continuing to be managed. The alert line's helping me understand what the price action is, but my trailing stop is where it is. It looked like the market wanted to push back lower here after retesting that same level a couple of times. But ultimately it pushed back up and my trade exited. So there you have it, using trend lines and my toolkit. Let me know if this helped, and I'll catch you next time.